What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Tuesday, March 19th. Alright guys, Nvidia stock here today finished the day up $6.18 a share. That's plus 0.7%. Not an incredibly volatile day, all things considered. However, intraday, it took quite a bit of movement for us to get to what ended up as essentially a flat, very slightly green day. Now listen, the stock is down about another 10 points here in the after hours. Nvidia did unveil some new AI chips. But you guys know the ultimate test to after hours movement like this is volume. And you can see here that if we compare intraday volume to after hours, the after hours volume is still incredibly low, even given the news. So the true test to that after hours drop of 10, 11 points is going to be, at least as of the recording of this video, right, is going to be at the open tomorrow, Tuesday. So take any after hours movement with a grain of salt. We'll look to the open. All right, let's get started here with our daily ritual, our volume profile analysis for the intraday session on the 5-minute chart. Here on this, guys, you know what we're looking for. I'm looking to pull any bias that we possibly can out of the volume profile that isn't incredibly obvious just by looking at the price action. So I'm looking for big changes in volume that are not contextual to what is expected that time of day, but it also, of course, has to correlate with obvious moves in stock price. Otherwise, what are we doing, right? So what I'm interested in is this pop and fade off the open, this bigger intraday move, and I'm actually going to separate these two, okay? Because what I want to look at this intraday bottom is that we had a lot of consecutive red candles and then pretty much an equal recovery. Now, when you have a move like this third move that I circled here, a lot of people assume, you know, because it's true that in terms of price, we ended up net neutral. But the truth is, not all moves, even if they're a net neutral, not all moves are created equal when you start looking underlying, and you can pull out more information by looking at the volume. One move could have been, you know, held a lot more bias than the other, for example, and that shows strength in one particular direction. And we will, of course, take a look at that. But let's start from left to right, starting with the open. Now, this candle on the open, it's very common that you see that first candle be the biggest volume candle on the day. Not out of the ordinary, and that is within context. If we go ahead and compare that to Friday's trading day, we saw today was actually a relatively muted open. So if we zoom back in here, you can see that we see a volume fade very quickly on that pop and fade. And honestly, by the time the pop even finishes, the volume has already regulated, and then we just see a pretty contextual fade as that moves on. So there's really nothing we can pull out from the open there. So let's move on to that second move. Now, bulls. A lot of bears you're going to see if you're in chat rooms or maybe our free Discord or whatever it may be here tonight. You might see some bears looking at these little volume bars that are popping on the red side, like this one, for example. Listen, for me, I need to see multiple, usually at least 3 minimum, consecutive, out-of-context volume bars. When we're dealing with one little pop, there's too much fooled by randomness potential, and that's what we're getting there. This volume, really, the profile on this drop-off that we saw intraday, there is not enough bearish bias for me to sit here and say that's a win for the bears, at least when we start looking toward the depth of volume profile. Now, of course, in the stock price, it did fall. But the point of this exercise is to look deeper, because we all already know what happened in terms of the price. Now, this third move intraday, let's just see if we can pull anything out of there. So we got that consecutive, those consecutive red candles into the intraday low, and then we got a nice, rather swift recovery. In terms of the volume, we did start to see increasing selling volume. However, the buying volume on the recovery does equal that. So for me, that's a wash. Okay, there is not any particular bullish or bearish bias in that move. And on a day like today, honestly, just from an unbiased perspective, we saw that big pop in pre-market, and today was really a fade, but we just already had a lot of padding, which is why we ended up plus 0.7% and not red. So the fact that throughout this entire big bearish move to the downside, and then we of course got a little recovery, consolidation into the close, throughout that entire bearish move, the fact that we didn't really see any obvious bearish bias within the volume profile, I think can be, you know, kind of a breath of relief, I suppose, for bulls looking at today's intraday movement. You know, of course, understanding the fade in terms of stock price, of course, that is real, but we're looking one step further in terms of one additional factor to that, okay? Let's move on now to the psychological self-fulfilling prophecy levels that I'm going to pay attention to heading into Tuesday here. You can see that since we covered, you know, Nvidia for the weekend video heading into today on Friday, we reclaimed both the 50 period and the 200 period here on the 30-minute chart into the open. We did give them both up intraday, popped higher, and rejected into the close. Now, this fade, and keep in mind, again, take the after hours with a grain of salt since volume is so low. We got news, again, but volume is low. And when volume is so low, stocks are very easy to bully, let alone, I mean, pump as well, really, in this case, bully, okay? We closed, you know, 1/3 below both the 200 period and the 50 period here on the 30-minute chart. We currently find ourselves less than 2%, 1.8%. So listen, bulls, what I'm really looking for tomorrow from a bullish perspective is a high volume crack back upside above both of these moving averages, the 50 and the 200, just because they're the most popular on a very popular time frame, the 30-minute. So there's a lot of eyeballs on this chart. High volume break back upside, get up there. Low volume pullback on a retest, if we get one to begin with, if we get that move upside, okay? Low volume on the retest, high volume upside bounce confirmation. That is a thing of beauty when you're dealing with a fresh break. Bears, really simple for you guys. Any upside test of either of these, I expect that if we saw, you know, spending some time beneath these levels to this degree, I would expect to see that 50 period curl back downside below the 200. Any upside test, you're going to want to see a hard, high volume, just clean rejection. Okay, and then ideally, if you're a bear, that 50 period continuing to curl downside at an accelerated rate. Let's move on now to the 4-hour chart and take a look. You can see this one is very much so in play, so to speak. We currently find ourselves approximately, at least in the after hours here, 1.7% away from a move, and that's the after hours price, to retest that 50 period here on the 4-hour chart. Again, an incredibly popular time frame with an incredibly popular moving average, the only reason we're interested at all. This one here is really similar to the 30-minute bulls. Hard, high volume upside break is ideal. And then if we get a retest, which I actually prefer retests because it shows confirmation, low volume and then high volume bounce up out of that hole. And then 900 really becomes the story at that point. We'll get to that in a second here. Bears, any retest, again, that's about a 1.7% upside move. Any retest, you're going to see just a clean, hard, high volume rejection. Maintain that 50 period as resistance, which we really didn't get much of an opportunity to do today, since today is the first day of that break, you know, being that hard reclaim in pre-market that we got this morning. Now, if there's one chart you do not skip, it's the daily. This is the most contextual, most psychological, popular chart there is. This has the most eyeballs, and it makes the cleanest story available to us, which is the one I want to pay attention to. So did you guys notice anything on both the 30-minute and 4-hour? From a bullish perspective, each individual event, now keep in mind, again, this is the daily, it's not going to take into consideration after hours, okay, but that's okay. But each of those events on the 30-minute and 4-hour charts set us up for the real story here tomorrow if you're a bull, and I suppose a bear as well. $900 a share is still the story here, and we're now even closer because it was a small green day. Bulls, crack and hold 9, reclaim it ideally, and spend as much time above $900 a share intraday as possible. Reclaiming it with 4 minutes to the bell is quite a weak reclaim in my opinion. I would love to see a reclaim, spend, 2 hours, 4 hours, 5 hours above that level, let a lot of volume pour in, a big sample size of opinions. We can, I don't care if we bounce off 6 times intraday, just hold it with each bounce being on high volume. If we bounce once, even better. Okay, as long as that pull away, that claim, that confirmation is on high volume bears. Any upside test of 9. Hard, high volume rejection, because the ideal case for a bear tomorrow is really to get down below, I would say, this 850 to 860 region. To be safe, the stock's currently somewhere in this region after hours. 850 is kind of that area to watch if you are a bear, but that's, 2.5% downside move away, so just keep that in mind. We've seen crazier things out of Nvidia, but, it's not a flat day by any means. Really simple, guys. Bulls and bears, each side. We're always just trying to make clean, confirmed stair steps in our direction, whether that's stair stepping up or stair stepping down. And psychological levels in the short term, that's going to be the way to do that. Now, let's take a look here at the chain and see what's the bias out of the traders as we head into Tuesday. 1.18 million total contracts traded. That's a good sample size. We had 807,000 calls, 373,000 puts. So we're seeing more than double calls traded compared to puts traded here today. That's a very heavy call side bias. And the short-term delta range, that's 0 to 20, those are those short-term speculators. We had 304,000 calls and 193,000 puts. Yet again, a relatively heavy call side bias, even in that short-term speculation delta range. Listen, if you got value out of this video, please subscribe to the channel. I greatly appreciate it. My goal, my new goal, we hit 5,000 by Monday, or I'm more so market open today. So thank you guys for that. My new goal is 6K by next Monday's market open. So again, if you got value, please subscribe. I appreciate you, and I'll see you in the next one.